Let's talk about accounting. But I want you to forget everything you think you know, the boring math, the spreadsheets, the green visors, because today we're going to look at accounting for what it really is, a language. It's the universal code that every single business, from a corner coffee shop to a global corporation, uses to tell its financial story. So, what is this language? What are we really talking about here? Well, it's the script that lets you see what's truly going on inside an organization. It's how we make their story understandable to everyone.
Okay, here's the official definition. Now, you see a lot of words here, but the most important one, the one I want you to focus on, isn't recording or processing, it's communicating. At its heart, accounting is a system designed to translate a company's actions into a clear, standardized story that anyone can pick up and read.
Now, you might think this is all a modern invention, born alongside computers and fancy calculators, but you'd be wrong. The roots of this language go deep. I mean, thousands of years deep. This is an idea as old and as fundamental as writing itself. Just look at this timeline. It's incredible. We start way back in ancient Mesopotamia, with people literally scratching records onto clay tablets. Then you fast forward to the Roman Empire. Even Emperor Augustus needed detailed financial reports to manage his massive territory. But then, boom, 1494. This is the game changer. An Italian monk named Luca Pacioli writes down the rules for the double entry system we still use today. And by 1880, it's a full-blown profession, a cornerstone of the modern world. Let that sink in for a second. The fundamental grammar, the core operating system of global finance, was codified by a mathematician in Venice over 5 centuries ago. It's a system so elegant and so powerful that it's still the bedrock of business today. That's just amazing. All right, so like any sophisticated language, accounting has different dialects. I mean, you don't talk to your boss the same way you talk to your best friend, right? It's the same idea here. Businesses tell their financial story in different ways depending on who's listening. Let's break down the 2 main versions.
So it all comes down to who you're talking to. First, you have financial accounting. This is the formal, public-facing story. It's for outsiders, investors, banks, regulators, you name it. And because of that, it has to follow a very strict set of rules called GAAP. It's all about what happened in the past. On the other hand, you have management accounting. This is the internal conversation. It's for managers inside the company to help them make decisions about the future. It's flexible, forward-looking, and totally customized. And then you get into the really cool stuff, the specialists. Tax accountants translate the company's story for the government. Auditors act as independent fact-checkers, making sure the story is true. And then there's my personal favorite, forensic accountants. These are the financial detectives. When something seems off, when fraud is suspected, these are the people who are called in to follow the money and uncover the truth. Of course, for any of this to actually work, for anyone to believe these financial stories, there have to be rules. You can't just make things up. This whole system is built on a foundation of trust. Those rules are called Generally Accepted Accounting Principles, or GAAP for short. The best way to think about GAAP is as the official grammar and style guide for financial accounting. It ensures that everyone is speaking the same language, so that $1 of profit at one company means the exact same thing as $1 of profit at another. It's all about consistency, so we can compare apples to apples. So how do we know companies are actually following those rules? That's where the audit comes in. It's a verification process. It's simple, really. Step 1, a company prepares its story. Step 2, an independent outside auditor comes in to check their work. And step 3, the auditor issues an opinion to the public, basically saying, yep, we checked the math, and this story is a fair and honest account of what really happened. But what happens when that system of trust breaks down? What happens when this powerful language isn't used to inform, but to deceive? Well, that brings us to one of the most infamous examples in modern history, the Enron scandal. On the surface, Enron looked like a titan, an unstoppable force in the energy world. But in reality, its executives were masters of illusion. They were twisting the language of accounting to tell a story that was pure fiction. They used shady, off-the-books partnerships to hide billions of dollars in debt, all while using fraudulent accounting tricks to book profits that didn't even exist yet. They weren't just bending the rules, they were creating a whole separate reality. And when that fake reality finally came crashing down, the collapse was catastrophic. At the time, it led to the single largest bankruptcy reorganization in American history. Thousands of employees lost their jobs, their pensions, their life savings, everything. Just gone. And the failure went deep. It wasn't just Enron's management. Their auditors, Arthur Andersen, one of the 5 biggest accounting firms in the world at the time, they were supposed to be the watchdogs. They were supposed to protect the public. But they failed. The scandal was so toxic, it didn't just destroy Enron. It led to the complete collapse of Arthur Andersen itself. Public trust was shattered.
The fallout was so massive that the government had to step in. To restore confidence in the system, Congress passed the Sarbanes-Oxley Act. This law completely changed the game, creating much stricter regulations, more oversight, and incredibly severe penalties for financial fraud. The rules had to be rewritten from the ground up.
Now, the huge reaction to Enron wasn't just about punishing one corrupt company. It was about rebuilding the foundation of the entire economic system. And that really brings us to the big question. Why does this all matter so much? Why is this language so important that its failure could shake the entire economy to its core? Because at the end of the day, accounting is so much more than numbers. It's the bedrock of trust that our entire modern world is built on. It's what allows a bank to lend money to a small business. It's what gives an investor the confidence to buy a share of a company. It is the quiet, essential language that allows trillions of dollars to move around the globe every single day. Without it, the whole system grinds to a halt.
But here's a final thought. As artificial intelligence gets better and better at doing the number crunching part automatically, what does that mean for the future of the profession? Well, maybe the accountant of tomorrow will be less of a calculator and more of an interpreter, a strategist, and a detective, ready to write the next chapter for this ancient language of business.